What's going on, everyone? Welcome back to the Independent Experience. I'm IndyXP, and we're coming to you again with the morning market wake-up call for Monday, June 15th, 2020. I hope everybody had a great weekend. I had to work Saturday, but Sunday was pretty good. So let's go ahead and jump on into the markets, see where we're going to be starting this week off at. Gold is down slightly, currently at $17.46. Silver continuing to slide, currently at $17.33, giving us a ratio of 99.10. Platinum is steady, currently at $822.61. And palladium is back under $2,000, currently at $1994.02. In other metals markets, rhodium is steady at $8,700. Copper is down a few cents, currently at $2.57, and aluminum steady at 70 cents, while uranium is also steady at $33.20. Barrels of crude oil are sliding a little bit more. We are coming up on the July futures contracts expiring. Should be later this week, I believe. Barrels of crude oil are currently down at $35.51. Wall Street closed up on Friday. All three markets showing positive gains. The Dow Jones was up 477 points, closing out the week at 25,605.54. The Nasdaq was up 96 points, closing out the week at 95,88.81. And the S&P 500 was up 39, closing out at 3,041.31. Reports are the Dow futures are down quite a bit so far for today. So, well, we'll just have to deal with that when the markets open, I suppose. If you guys trade in Bitcoin, those are down slightly, currently at 91.1342. And if you guys trade in the Utah Goldback, those are currently going off at 301 a piece. In today's video, I wanted to review a quick article from MoneyWatch. This is from Mark DeCambre. This is from this morning. He just published this. So this is entitled, "A Portfolio of Stocks Being Bought by Mom and Pop Investors is Trouncing Wall Street Pros. Here's what they're buying." It's no secret that retail investors have been stepping up their participation in the stock market lately, but the degree by which they have outperformed professional investors may be coming clearer into greater focus. A basket of equities that have been eagerly bought by individual investors since the depths of the coronavirus-induced sell-off of March 23rd has returned 21%, or 61%. It's Monday. I haven't had enough coffee yet. Hold on just a second. That one goes out to Uncle Sal. Sorry, I can't slurp out of those cups very well. 61% returns as compared to returns of 45% for a portfolio of investments owned by mutual funds and hedge funds, according to Goldman Sachs data, including prominent analyst David Kostin. I'm not familiar with David Kostin, but I'm sure Wall Street pros are. Wall Street pros, who have consistently lagged behind overall market performance since the last crisis 12 years ago now, may find themselves lagging behind mom and pop investors by a whopping 16 percentage points, according to the bank's research. Goldman Sachs analysts report that much of the outperformance by individual investors occurred in the middle of May, and upbeat data on declines and the spread of the deadly pandemic and less bad economic reports encouraged bargain hunting in cycles. Lost my place here in the article, including small capitalization stocks and shares of companies that were economically sensitive and would benefit from signs of improvement in the business climate. Such stocks were quickly embraced by value-seeking retail investors, such as yours truly, of course, and now make up a large portion of our retail basket, Goldman researchers wrote. They've attached a chart. All it shows is that retail investors are 16% up on the pros. Some of the investments that retail investors have scooped up include shares of Penn National Gaming, which is gambling, Moderna, not sure who that is, Tesla Incorporated, MGM Resorts Incorporated, again, casinos, Royal Caribbean Cruise Lines, Marathon Oil Corporation, Snap Inc., not sure who Snap is, GoPro Incorporated, Norwegian Cruise Lines Holdings, Groupon, Ford Motor Company, Facebook, and Apple, to name a few. The performance of retail investors comes in as an increased activity by retail investors has drawn more scrutiny in recent weeks. Some have argued that growing interest in the markets by average Joes and Janes may signal that the stock market may be entering a frothy period. As the main U.S. stock gauges, the Dow Jones Industrial Average and the S&P 500 and NASDAQ Composite Index last week registered its worst week of decline since March 20th amid worries that rich stock market valuations, concerns about growing signs of COVID-19 pandemic, and grim outlooks of economic types. So, we do cover the stock markets here, and as you guys know, I recently got in on investing on my own, over the top of my 401k that I routinely invest in. And, we talked about that some, and I am still riding high on my Spirit Airlines stock. We talked about the varying stocks that I had, and the Spirit Airlines stocks it was just outperforming everything else that I held. So I sold off most of everything and put it in Spirit Airlines. My dollar cost average on Spirit is still under $11 a share, and it's currently just over 18. So I've done pretty good. I'm up about that 61%. I'm right at that 61% that they talked about in the article. So I am on par with everybody else. So at least average anyway. So I want to know what you guys think. Have you guys done any investing? I know this is primarily a silver and gold stacking community, but I truly believe in diversification, and you can't diversify much if you only invest in gold and silver. So have you guys put any extra money into 401ks, or have you guys gone out and gotten a TD Ameritrade account like I have, or a Goldman Sachs account, or one of the Acorns, or whatever the other small time investing apps are? Let me know what you guys have done down in the comments. I'd really be interested in finding out what you guys are doing. Guys, I do greatly appreciate every single one of you, and if you happen to appreciate Old Indy XP, why don't you go ahead and hit that thumbs up button for me right there. It helps me out immensely. If you happen to be new to the independent experience and you want to get this content delivered directly to you, go ahead and hit that subscribe and jingle bell right there in the corner. Bing bong. So you can be notified of when new content is coming out. If you want to check out some of my previous content, cards going right here. This area right here. There we go. Right there for you. Those are going to be the latest and greatest videos. Make sure you check that out at the end of this one. I've been Indy XP from the Independent Experience, and I'm here again to remind you, if the women don't find you handsome, they should at least find your pockets heavy.